It's Tuesday, June 16th, 2026. You're listening to the DX Today AI Daily Brief. Today, Anthropic's most powerful models remain offline after a government export order, and the standoff is far from over. SpaceX enters its second week as a public company, with index funds forced to buy. And a wave of open-weight Chinese models is rewriting the economics of artificial intelligence. Let's get into it.
We begin with Anthropic. Its two newest and most capable models, Fable 5 and Mythos 5, remain pulled offline worldwide, following a United States export control directive issued on June 12th. The order arrived after a viral jailbreak claim raised national security concerns about public access to frontier capabilities. Anthropic says it is working to restore access as soon as possible and has been refunding affected customers, but no firm timetable has been given. The shutdown lands while Anthropic is already locked in a separate legal fight with the Pentagon over a supply chain risk designation. For enterprises, the message is blunt. Model availability is now a risk variable, not a constant.
To the public markets now.
SpaceX is entering its second full week of trading on the Nasdaq, and the stock is being driven as much by index mechanics as by fundamentals. After listing on June 12th at $135 a share, it closed its first day roughly 25% higher. This past weekend, MSCI began adding the stock to its large-cap indexes, triggering a wave of mandatory passive buying. The bigger catalyst is still ahead. Under Nasdaq's rules, the company becomes eligible for the Nasdaq 100 in early July, which would force hundreds of billions of dollars in benchmarked funds to buy in. For now, the largest listing in market history is trading on narrative and structural flows more than disclosed results.
Across the Pacific, open models surge.
In China, Moonshot AI has thrown down a marker for open-weight artificial intelligence. Its new release, Kimi K2.7 code, is a roughly 1 trillion parameter coding model published openly on Hugging Face, where anyone can download and run it. Community testers put it around 81% on a leading tool use benchmark, placing it competitively with the best Western coding systems. The timing is pointed. It arrived the same week a United States government order pulled a top American model offline. Developers immediately seized on the contrast. A model you host yourself cannot be recalled by any government. The catch is hardware. Running a model this large in production still demands serious, expensive infrastructure that most teams simply do not have.
Still waiting on Google.
Google's next flagship is the most anticipated model still sitting on the runway. Gemini 3.5 Pro was teased at Google's developer conference back in May, with Sundar Pichai promising delivery within the month. 3 weeks on, it has not shipped, and prediction markets are now betting on a late June arrival. What is confirmed is ambitious. A 2 million token context window, which would be the largest of any commercially deployed frontier model, plus a new deep reasoning mode aimed squarely at the hardest problems. Pricing is expected to undercut the premium tier rivals. If Google delivers, it folds its hardest reasoning and longest context work into a single pro tier and reclaims ground in a brutally competitive month.
Another Chinese challenger emerges.
Staying with the open weight surge, Shanghai-based Minimax is pressing its advantage with M3, its newest frontier model. On the closely watched SWE Bench Pro evaluation for real-world software tasks, M3 sits at the top of the open weight field, around 59%, edging out rival Chinese systems. But the headline isn't really the benchmark, it's the bill. Chinese frontier models are now running anywhere from 15 to 30 times cheaper than comparable Western systems for similar work. That cost collapse is reshaping how companies think about deployment. When an open model you can self-host approaches frontier quality at a fraction of the price, the calculus for paying premium prices on a closed API starts to shift.
Following the money now.
NVIDIA's chief executive, Jensen Huang, is pouring fuel on the artificial intelligence IPO frenzy. In public comments, Huang compared buying shares in the coming wave of AI listings, SpaceX, Anthropic, and OpenAI to getting in early on Amazon or Google decades ago. It is an emotionally compelling pitch, and it carries an obvious commercial interest. NVIDIA is the primary chip supplier to all three companies, so every dollar of artificial intelligence infrastructure spending flows disproportionately back to its data center business. Skeptics note a key difference from the early Amazon era. Today's AI entrants are going public, while Microsoft, Google, Meta, and Apple build rival capabilities at enormous scale. The parallel is seductive, but the competitive backdrop is far more crowded.
And the bill for all this?
Just how expensive is the artificial intelligence build-out? Goldman Sachs now estimates that cumulative spending on compute, data centers, and power from 2026 through 2031 will reach roughly $7.6 trillion. To put that in perspective, the bank says that is close to a quarter of annual United States economic output, and more than the entire global investment in internet infrastructure across the 1990s and 2000s combined. The figure matters beyond its sheer size. Every data center that breaks ground and every chip order signed creates a powerful constituency against slowing down. The deeper takeaway for businesses is simple. Compute scarcity is now a structural feature of this decade, not a passing shortage.
Two giants head public.
OpenAI is quietly moving toward Wall Street. The company has confidentially filed its registration paperwork with United States regulators, putting it in the IPO pipeline at the same time as its rival, Anthropic. It is the first time two leading artificial intelligence labs have lined up to go public simultaneously, and their strategies could not be more different. OpenAI is committing to a massive, capital-hungry build-out of its own data centers, while Anthropic has chosen to rent compute from suppliers instead. Public market investors comparing the two will effectively be betting on which theory of artificial intelligence economics is correct. OpenAI has also kept up its acquisition spree, recently absorbing a personal finance startup in its seventh known deal of the year.
Now a moral voice.
From an unexpected corner, the Vatican has entered the artificial intelligence debate. In a new encyclical on technology and ethics, titled Magnificat Humanitas, the Church argues that artificial intelligence must be, in its words, disarmed, welcoming, and accessible, and warns against the concentration of power that the technology can enable. It addresses AI's impact on human dignity, on work, on truth, and even on warfare. With well over 1 billion members worldwide, the Church's institutional voice in technology policy is significant and growing. Notably, one of Anthropic's own co-founders published remarks engaging seriously with the document. It is a striking sign that the ethical questions around frontier artificial intelligence are now being debated well beyond Silicon Valley boardrooms.
Back to the enterprise.
Microsoft is broadening what its workplace assistant can do. The company has rolled out the third major wave of Microsoft 365 Copilot, and the standout change is choice. Copilot now supports multiple underlying models, including Anthropic's Claude alongside OpenAI's systems, letting businesses route tasks to whichever engine suits them best. Microsoft is also pushing harder into agents, with new capabilities it calls Copilot Cowork, designed to take on longer, multi-step assignments rather than just answering single questions. The move underscores a broader industry shift. The assistant is becoming a workflow layer that sits across a company's tools, and increasingly, no single model vendor gets to own that layer outright.
One more open release.
There is yet another entrant in the open weight wave. The Chinese lab ZAI has released GLM 5.2, an open weight model that landed in the very same week as Moonshot's Kimi update. Taken together, the two launches gave the global developer community a pair of freely downloadable systems that, by community testing, rival or exceed top closed models on certain coding tasks. The pattern is now unmistakable. Where the most capable artificial intelligence once lived almost entirely behind paid, closed APIs, a steady stream of high-quality open releases, most of them from China, is steadily eroding that moat. For developers wary of sudden recalls or pricing changes, The appeal of weights you control keeps growing.
Finally, to Washington.
We close in Washington, where the federal government is moving to take the wheel on artificial intelligence policy. Earlier this month, the White House issued an executive order titled Promoting Advanced Artificial Intelligence Innovation and Security, emphasizing a deregulatory approach and pushing back against a patchwork of state-level AI laws. The administration argues that lighter rules keep the United States ahead in the global race. Critics counter that loosening oversight, just as models grow powerful enough to trigger export controls, is a risky bet. The tension between a federal government that wants to accelerate and individual states that want guardrails is now one of the defining policy fights of the year, and it is nowhere near resolved.
That's your briefing for Tuesday, June 16th, 2026. For DX Today, stay curious.